Hey, Dan Westfall here. My company's Client Focused Financial. So today what I want to talk to you about is a common thing that I hear from people from time to time that are talking about the stock market. What I hear is that that people think that either the stock market's rigged or that the economy is going to tank and go to zero because the market's been going up for the last 10 years, and it has to go down. So really when I hear this, and especially when I hear it more from like the people that are like conspiracy theorists that think that like there's some, dramatic thing like we're gonna get taken over by Russia or China, I kind of like in my head chuckle a little bit and sometimes just have to tell them, I'm like, that's the dumbest shit I've ever heard. But um, seriously, it comes up. But really why people bring this up is their fear of losing their money. So, and I respect that. So when they're not being crazy. But the reason that they're thinking this, and then the stock market going to zero isn't a very realistic thing, but the reason that they're thinking this is that we have gone up for the last 10 years. The market, it's March 2019, the market's gone up for the last 10 years straight. And yes, we've had little dips along the way, but overall it's gone more or less straight up. And at some point, we will go through a recession again. But people thinking that, well, let's pull my money out of the market and buy gold, probably not the best decision. So, and the reason I bring this up, and this was just somebody that I was talking to today, I was bringing up putting all their money in gold. Gold really has not, from a rate of return standpoint, doesn't make that great of a rate of return over time. It's actually averaged less than inflation. So you could have just put your money in a government-backed bond, and it would have done better than gold over the last 40 years. It's done less than 3%. So, but volatility-wise, it actually is just as volatile as stocks are. So, for those people that think that gold is the way to go and it's safe, it's tangible, that's great. It may be tangible, but it also may be not worth as much as it was, 5 years ago. Because if we're going back to like 2012, 7 years ago now, it was worth a whole lot more in 2012 than it was in 2015 after it dropped from $1,600 an ounce down to $1,000 an ounce. That's a pretty big percentage drop. It's actually just as dramatic as the stock market drop in 2008 was. So it's not really a safe haven if you're looking at it like that. But, as part of a diversified portfolio, not a bad spot maybe to put 5% of your money. But I just bring that up because I'm like, long term, stocks do well long term if you're invested in an index like the S&P 500 over the long term and you were to just hold that. So that's why Warren Buffett has made so much money. And really, if you're thinking that the US is going to be here in the future, it's a pretty good bet to put your money into stocks, because the only way that stocks are going to go to zero is if the United States is in a country in the future. So over the last 200 years, despite wars, despite recessions, despite depressions, the market rebounds every single time. So it's just a normal cycle when we go through a recession and then come out the other end and there's an expansion, and we've always grown over the last 200 years. So betting against the stock market long term is like betting against the United States long term. So just my thoughts for the day. Just figured I'd bring that up because it was top of mind because of somebody I was talking with. For more videos like this, or you want to hear more of my commentary, check out the Insights tab on my website. That's you can click the link above for that. If you have any specific questions, feel free to DM me, give me a call, whatever you prefer. I'm more than happy to talk to you individually about your questions. Until next time, thanks for checking me out.